Welcome to the Twomey Stock Market Report. Today is Tuesday, May 17th, 2022, and I'm James Twomey. Today's segment is positions and trends versus technical. What is the bull and bear case? Translation, what are our positions, or what positions should we be establishing, and what is the trend overall versus the technical indicators? So today's segment follows up. The last one was end of last week. So a lot has developed, and we want to review those developments. As you know, we have our Twomey stock market analysis. What are tips, right? Our investment process, Twomey investment process. We look at the trend. We look at the economic indicators for those trends. And then we look at environmental issues, what's happening real time out there with the Fed, the government, short-term situations in the world or locally in the U.S. that will affect the stock market. And then we also look at our sector of what's hot and what isn't. And then we meld that all together and come up with a short-term trend and how to invest. We also, once we come up with our trend, which has been clearly down, correct? And our bias was established by the fact that inflation is running rampant. We're way behind the curve. As you can see, everyone is discussing it now in the news. It's no secret. Sometimes when everybody's on the same side of the page, you're going to start wondering, does that mean the horse is out of the barn and the market's about to change? At this particular juncture, my bias says no. I think we have a long way to go. I think the Fed has to stop the purchase of bonds and start unraveling that whole situation. They're supposed to start that in June, the QE infinity, I call it. And we also have inflation running rampant. That doesn't stop overnight. It doesn't start overnight. So once we establish our bias, then trends in the market short term start to take place. So we want to have technical indicators that check our trends to see if it's still moving in the direction as we anticipate. Has it changed? And now our trend has become biased, and we need to have something tell us that we're now being biased versus establishing a new trend, or is the market just going sideways, which is, certainly a possibility. So we use things like relative strength index. We've got a couple of great examples to follow up from last week. We look at the oscillator for stochastics. That's our fast oscillator. It looks at something that helps us with overbought and oversold strategy, just like the relative stock index, but it happens at a very rapid time frame. And what it allows us to do is, make some analysis. So the buy signal when when the back indicator is below 20 and then rises above 20. The MACD, that's something that's a little bit slower oscillator, less changes over a period of time frame that we're looking on our charts, and that gives us more of a momentum change of the market. Use all those to determine what's next. So we went over our tips. We also now, Twomey investment process, but there are previous segments. If you go back to those, you go those into detail, or email me. I can bring those up and send them to you. Is our bias now clouding the trend? So we have to look at that. We also want to start talking about choosing stocks, picking entries and exits. And has that trend changed? And are we proving or disproving our bias? So we want to look at those today. We want to do a sector table review. I look at these every day. What are the short-term versus long-term trends? Basically, what sector is showing me strength or lack of? And what's next? Understanding the process. I think we've done that pretty well. Stock selection is we're moving into that phase now where we'll do some selections and certainly monitor those. So first off, let's look at our stock sector review. This is a little bit busy, but the short of it is energy. If I look at the change very short term versus year to date. So first of all, far right, year to date, energy has outperformed. We've talked about ad nauseum. What's next? looks like materials. And that's really an interesting one because materials could be gold, it could be other things. And now gold's been in a very bearish state for some time. And a lot of people were shorting it. The Russell 2000 is way down. The consumer discretionary has been way down. What's that? Those are industries sensitive to economic cycles, manufacturing, including automotive, household, durable goods, textiles, apparel. A lot of that's been the supply chain. What else hasn't? Healthcare has only been -6. That's year to date. And also utilities -1. So those are sectors that we kind of want to look at. So let's look at the 5-day performance. What's happened in the most recent, because we've had some really good developments since the end of last week. Energy is still outperforming 7%. Materials still 4%. And that's a real big basket. So I'm going to hold off for that. Russell 2000, very interesting. That's the lower small cap stocks tend to lead the charge downward and often can lead the charge backwards, but they tend to be last. In other words, the other indices will come on board and the Russell tends to be the last to take place. So that's a very interesting one. Consumer discretionary, we talked about, that's starting to show some strength. Healthcare, I'm going to skip real estate for now. Healthcare, and we've got some of those we want to talk about. Communication, industrial. Most of our industries are going to have the industrials, communication services, and financials. The S&P obviously is the indice we look at. NASDAQ, the COMPEX, we look at that. Information technology is part of COMPEX, SP, and also the to some extent the Dow. So we don't need to look at those sectors individually. And of course the Dow Jones. Basically, let's look at some of these really consumer staples. What's that? I tend to look at discretionary and staples almost in the same basket, but they are obviously showing a difference in strength here. What are staples? Staples are companies that provide goods and services to people that use things on a daily basis: food, clothing, personal products, deodorant, toothpaste, Procter and Gamble's, Tide detergent, that kind of stuff. I tend to think if our trend's correct, that we are in a recessionary horizon. We're not there yet. We're in for additional interest rates, slowing of the economy. People are pulling in their horns. Case in point, I look at it myself. I filled up my tank the other day. I paid over $60. I don't have a big tank, right? Fairly new car. It's very good on gas, but it's still a fossil fuel. It's $3.85 a couple of weeks ago. Now I'm up to $4.59. Same gas station and a couple that I visit. So it is skyrocketed. Part of that's the change of fossil fuels over from winter to summer blend. Grocery store, it's still out of control. But anyways, with that said, we're going to pick some of these and go through those. All right. So what's our stock review? I lead off with indices. I want to look at our indices. What is our stock analysis? Technicals versus versus our trend. Our trend has been down. Okay. Here's the Dow, and we go back to January 2022. The last 5 months, it's been down. Right? We've had some fits and starts, but basically where it went sideways, but overall it's been down. Recently, the last week, we had 6 days of really down, and a couple even prior to that where it was straight down. People were selling everything in their portfolios. Nobody was holding, they just wanted out because they didn't know where it was going. We talked about relative strength index, what was going on. We're going to show the SPY on that one because it's a little bit more clearer. But, here at this inflection point, which happened, was it Friday, I believe, the relative strength index, which is this color here, right, is right here. Oop, nope. I'll get it. Well, there we go. Back here Friday, it was at a 33.17. When we say 33, anything 30 or below, we say it's oversold and is due for a bounce, right? So we were way down here on our fast stochastics. It was starting to turn up on that day. Nothing had changed in the MACD. But if we look up in our chart, if you say, hey, geez, Jim, if you bought here, you would have had 1, 2, 3, 4 days of expansion. On the diamonds, let's say you would have got from 315 up to a close of 327. We'll take 10 points any day. That is true. That is true. We have not made that change. I'm short. I suggested to be short. Reason being, we have not seen the 10 EMA cross above the 15 EMA, just like over here, right? This inflection point, and then we would say all in, right? So is there a lag? Yes. What the lag prevents us from doing is getting a lot of sideways movement. In and out, in and out, in and out. So we tend to wait. Just to go on the dog, which is the inverse of that, which I am still short because I haven't been told by my indicators, but I have taken some off. And why? Because today we were broke below the 10 EMA. We happened to close at the 15 EMA. That's one of my indicators of that things are starting to turn south. But if we looked at where we were Friday on the relative strength index at that particular time, we were the opposite. Instead of being down at 30, we were up at 66. 70 is overbought. Overbought means everybody who's bought has bought. So that was an indicator of saying things were going to change, and certainly the trend has, right? So the reason why I haven't changed out of that, and maybe tomorrow I will, I don't know, but I'm trying, and I may lose some more. But again, when I'm in down here, and I've been short for most of the year. But with that said, if my last inflection point was here, and you ride it up, am I going to get the perfect bottom? No. Am I going to get the perfect top? No. Have I been stopped out of some of my positions, especially my 2Xs, because I put tight stops in there with heavy profits I used the 10 and the 15 EMAs for stops. Then today I did get stopped out on some of even my ones. Out of all my 2Xs actually after today. So if you've got a profit, I break it down in thirds. I put a third somewhere between at the 15 and 10 EMA. And if it's big gap from the 10 to where the stock closed, I sometimes put a third between that and the previous close. And then definitely a third below that 14 EMA. So tomorrow I should be out. If it continues to drop, I'll be out of everything. I'll protect the bulk of my profits, and I'll have taken a third. Usually I'll enter the market the same way. So let's just look at our short term for the dog. Short term, is it going down, and is that predicting what short term parts of it? I look at the 60 minutes chart, and sure enough, that did turn down. And that was back on the 13th. It did turn down on our MACD, and of course it's turned down on our fast oscillator. It was a good predictor, and it's continued down. The relative strength index on that is at 38, so it's a little oversold. But we don't trade the 60 minute. The 120 minute. This is why you'll look at this and you'll say, "Geez, the 120 is a very tempting chart to trade." And if you've got the time to sit in front of a chart, perfect. It's a great way to change, because this oscillator, let's look at the MACDs. I mean, the 9 EMA and the 10 EMA and the 15 EMA, it did trade down. You could have taken a position here and been, or if you were short, you would have sold here, excuse me. This is the short. And then also too, we had the inflection here and the inflection here. And the trend has continued to go downward. I will say there's a 41 on the relative strength index. That's telling us it's getting there oversold. The daily, we have not made that complete. This is not, the 10 is still above the 15. And until that changes, I want to keep at least a third of my short position on. If you had just taken one up here, obviously, we talked about that with the S&P. It's a hairy ride down that's a great example. You don't want to take positions when the relative strength index is like 60 and above, or 65 and above. Excuse me. So let's see. The relative strength index here is 54. The MACD is still positive, and the short oscillator for the stochastic has turned negative. So there you go. Let's look at that compared to the long position of the diamonds. We already looked at the daily. We could be going, if this 10 EMA gets up to the 15 EMA, it's worth taking a position. We have not completed the positive inflection at the MACDs, and we certainly have in the stochastics. So it's still a little bit risky because the market could go sideways. We know our trend is down. We haven't broken that trend per se, even though there's been some obviously up days, right? But it's still a little risky. This is why we're trying to prevent that short-term bump in the market where you're in and out and your reflective trading. Let's look at the SPY. The daily. We're looking at that. Right now, the relative strength index, 44, rising. We've got some good indicators. We've closed above the 10 EMA. Very, very positive. We're still under the 15, but very positive. We want that 10 EMA to become a resistance point and then build from there. Our MACDs are still, it's relatively low, negative, -10. It has not crossed positive. Our stochastics has shown a positive indicator, but it oscillates quickly. It's alarm bell 1. Alarm bell 2 is not kicked off. Alarm bell 3 is not kicked off. However, we have closed above that 10 EMA. Very positive. Let's look at the 60-minute. 60-minute, this is the SPY long position, SPY. And, it's at trading at 408. When we do go long, I'll show you a stock ETF that is better to play. You're not going to buy a share for 408. You're going to be in the 20s or 30s or 50s or 60s, whatever it's going to be, and it's going to be much more manageable in your wallet, especially if you don't have a lot to invest, right? And we're not going to be investing $400 share stock. Okay, what is our short? Whoa, look at this. The 120, very positive MACD, very positive this oscillator. Very positive. This 60-minute. 60-minute trend is definitely upwards. The RSI, relative strength index, 62. Is it overbought? The 60 is showing us a very upward trend, very positive bias. Is the 120 following suit? Yes, it is. Everything's positive. All our technical indicators. The 120, could you have taken a position here? Yes, very tempting. Now you know why I used to trade the 120s, right? The 120 minutes. I could be in it. It's hard because you're in and out often. You have high short-term capital gains. So, you're, depending on your capital gains rates, it's expensive to go in and out of stocks. It's attractive. But anyways, we beat that to a dead horse before. All right, so daily. What is the daily telling us? This is the SPY, our relative strength index. We already went over is 44. Nice position. This looks like it's getting ready for a positive, and certainly a good indicator. So what's the short of that? The 1-to-1 inverse. And again, I'm out of all my 2X's. I've some of my positions sold today because it dropped below the 15 EMA. So I had a third up here because there was a big gap from the high where the relative strength index that day was 67. I said I had taken a position that day before and added just because we were talking about this. And I said, people looked at this stock report and they said, hey, he's short. He's saying propagating short the trend. What if I jumped in here? And, we warned that was probably not a good place to go. And sure enough, we were right. anyways, so I had, since there was a big gap between that and 10 AMA, I had a third down here. I had a third right above or around my 15 EMA, and then the next third will probably kick off tomorrow for my stop because it's right below that, right? I'm surprised it didn't today. But anyways, I'm protecting the profit that we would have came in around this period. It's still, did we buy at the bottom? No. Did we buy at the selling at the top? No, but we kind of bought our way down and we're protecting our profits. Where is this going to go? I don't know, but the relative strength index here is now 54. It's heading down. We're getting to, overbought. It would be way up here where it was 66, 67. 30 would be way down here. So, will we get there? I don't know. I can't tell you. Our MACD is ready to turn, and then certainly our stochastic turn. But if we get stopped out, that's fine. Our 60-minute indicator, that's again down, down, down. We did make that inflection point change on the 15 and the 10. 15 and the 10. So that obviously is telling us sell, and the same thing on our MACD. So are we continuing that way? Well, our relative strength index is 37, getting into oversold territory, right? So maybe, the 60 is going to start a trend change. We'll know tomorrow. The relative strength index, while we're just talking about in the 120, it's 40. I mean, are we oversold? I don't know. I mean, it's leaning that way. But again, all our indicators says, get out of this position. Now, if you're trading the 120s, you would get out, and that's at 15.777, around that area, and it's down to 15.4. You would have stopped, save yourself some points there. The daily, we haven't crossed down below, but we're well, our stop would be right below this 14 EMA. We'll probably get stopped out tomorrow. Okay, and that, the problem is you start until you get that inflection point. I always like to keep a third, right? So I may drop that down a little bit, and I probably will, because until that changes, and it may have to come down to here before we get that inflection change. I mean, so you're going to go from 15.5 down to 15.2 or so. It's a half a point depending how many shares, but I'm going to repeat myself. We want something that's going to keep us in the trade versus being a reactive trade. Let's look at the QQQ, and this is a little bit interesting. Well, it's closed. This is our daily long. It's closed above the 10 EMA. Our 14 EMA hasn't crossed positive. Our MACD hasn't crossed. Our fast oscillator has. Our oversold indicator is today 43, so that's pretty healthy. Look at the 60-minute chart. Obviously we had just like the other charts, we had an indicator that said, hey, buy if you're trading the 60-minute. And you certainly can trade these charts on the 60 or 120. Just, keep in mind what we talked about. MACD positive and the short-term positive. Oversold indicator up in the 60, that's flashing. It's overbought. 120, all the same news as the other indices. And there we go. And if we want to just look at the oscillator, it is 56, pretty high MACD. So we would have got, if you're trading a 120, you would have got out here where that inflection was, and you certainly would have saved yourselves, in this case, 308 to 297. So, almost 10 points. Not bad, if you're trading it. So we're going. Let's look at the PSQs, which is the short 1-to-1 against the NASDAQ, and just about at our 15 EMA. It's going to go below that. That's your last third should be somewhere between that 15 EMA and down here. So you should have 2/3 of would have sold because you hit the 10, and since we had a big gap, you would have probably had a third up there. Anyways, with that said, we're still not positive. We are positive on the MACD. Excuse me. I think I said I wasn't, but we are. And then the 60 minutes. So this is, we're going to see. Is it going to go sideways? Is it going to come down? We'll see. 60 minute here. All the same news as everyone else who would have sold over here. Relative, we overbought. It's 38. Oversold. Could be 120. Same direction. You would have, telltale signs is you don't want to be short, because it's that position. If you're short, is going to be whittling itself down value wise. The oversold. Relative strength 42. These are starting to tell us, wait a minute, there may be, this may be the end of this long push on the Qs, but we don't know that. So tomorrow or the next day, look for the Qs, the SPYs, and the NASDAQ. Let's do the Russell IWM just real quick. All the same story, okay? The MACD is starting to turn, and the oscillator down here. So if we just, that was at 28. So if we just took the oscillator and said, you know what, let's get out because it's an oversold situation. That's not bad either. You could have just sold the 30 position there. But we'll develop this as I bring you along. The 60, same story, is cross positive and continues. 120, same thing. Okay, cross positive. Just where is the relative strength index on this one? It is way up there. It's near overbought. 61. The daily, like I said, it's healthy at 45. So there you go. So now let's take a look at our sector, right? Excuse me, backspace. So we did, our chart says we had energy. All right, well, let's do energy, right? So let's do energy. What do we have for energy? Energy is UNG, XLE, the inverse. That's okay. Energy. There's plenty to trade in energy. Let's try UNG. UNG, I got stopped out because I raised it. I was in way down here. See where this inflection point, pretty much up, rode it all the way up. Some in and out here. But when I had these two down days, I got out most of my position. But this day, I started buying back in. The relative strength index said it was oversold here. So I probably should have stayed in it. Sure enough, it bounced, and now it's been on the way up. Where is it headed? Well, let's look at our technicals, right? Certainly that short-term chart and our sector trading, 7% energy, and this is an energy view, if you will. Okay, what is our technicals? All right. The 10 EMA was never crossed by the 15, and the last time that was way back here. So it got close. I was in and out, but I jumped back in. I should have just stayed. There was a lot of pain between up here and down here. I did do a third, and with that said, I had to make a decision, and I went back in. Our 60-minute, what is that telling us? The relative 66 is getting into an overbought situation. Everything's positive. The 120, everything's positive. Relative strength index is capping out at 64. Kind of strong, overbought. It had gotten up to 77, and over here was up in the 82 neighborhood. So it's still healthy. The MACD and everything's still healthy. Everything's positive to say state. The 60s going up, the 120s showing upward mobility. The daily showing upward mobility. Right now, stay in it. Should you take a new position here? I'd put a buy in at right above the 10 EMA is 27.2, and my stop would be down here at this inflection point at 25. So you got a 0.5. So you got almost a 2-point swing there. What else for energy? We could look at XLE. XLE I was stopped out from the 77 range, and I have not been able to get back in. I keep putting buys. Now it's way up here. The relative strength index is only at 61, I say, because again, that had gotten up pretty high before 77s, and we're not quite there yet. Way above our 10 and 15 EMAs. MACD and stochastic, positive. There was, looked like there was going to be a negative inflection point. I don't think that ever took place. So I could have stayed in it. I would have been fine. See what I'm talking about? Short-term market shakeouts. If you follow the rule of the 10 and the 14 crossover, you can certainly take some off, but this would have kept me in the trade. I should have listened to myself. I got nervous because I know energy moves really quickly. When you see a downdraft like this day, which was the 9th, and the next day, energy just moves real quick, and you get caught with your pants down real fast. I've got buys in and around my, down here, 80. I'll probably move that up to 81, 82, but it is what it is, Sometimes you just got to hold your nose and jump in, right? 120. 120 is way up here. What's the relative strength index? 66. It's getting tired. I don't know. We'll see. What else? The inverse of or USO, United States Oil ETF. Same thing. That was kind of close to being inflection. A lot of shakeout here. I am not in it. I don't really like trading this. I like trading the short. We're pretty low in the relative strength index, so we're not overbought, but it does move rapid. If you wanted to get in there, I would put a buy at 80, and my stop would be 77. And it does move rapidly. What is the inverse? SCO. I was in and out of that very quickly. This is still downward. That was one that was getting close to an inflection point. I didn't wait. I got in early, and it was a fake out. Okay. Stay away from that as well. There's other energy. What else? OIH, oil sector. XLE is an oil sector, and it does also have oil companies. That's an ETF. OIH is an oil ETF, but it's mostly oil sector services, drilling, shipping, no, not shipping, production equipment, oil companies, that type of thing, rig, that type of stuff. It's more associated with the drilling and companies versus the actual oil company itself, Chevron and Mobil. But you can go within, you can look up OIH and look what's inside there and compare that to XLE, the top 10 holdings that is, and you can make your own decision. This one moves rapidly. Again, this is showing the 14 crossed up here. I was out of it. I was in and out of it, but I've been out of it since this point here. See that, again, our inflection points. We get the warning signs. This is a good one because this one trades rapidly and it's a high price. You get your warning signs. You're getting ready. It's telling you something, and then it inflects here. So if you got out here and you're in somewhere down here, that's a heck of a profit. That's why I say you really want to wait until this major change. Now, the problem is, you went to bed this night and it maybe not have changed, and you wake up and it's, it opens up at 268 and you went to bed and it was 276. These things, that's why the energy sector is very dangerous to trade. It's on its way up. Let's see, 60-minute. What does that tell us? 60-minute. Wow, change positive way down here. It's way in the overbought section. The 120. Again, very tempting to trade the 120, isn't it? Because if you got in here at 259 and it's at 276 now, that's a pretty good bump. But like I said, I'm not in it. The trend's heading up. It's up in the over. RSI is way up there, 65. It's way above our 10 EMA. That tells us, it's going. And now the daily. So we'll have to make that decision. We'll see. Right now, I'm not in. What else we looked at? Well, let's go back to our PowerPoint. Enter. All right. XL Healthcare was one that we looked at. Healthcare has popped up, and it always does, especially in a slow economy. 3.56 year over year, minus 16. It's kind of held its own. Consumer staples, is the other one. Discretionary is really obviously very low over here year to date because of the supply chain issues, since it includes autos and that type of thing. But with that said, we're on healthcare. Healthcare is usually a good one. It's usually fairly stable. It's like utility. So let's look at our healthcare stocks we talked about. XLV is the healthcare ETF. UNH is one that we've been playing with the 200. Let's start with the XLV. Okay, XLV. I don't know if I have a position there yet. I'll have to. Next segment, we'll talk about that. XLV. It is not the daily. Where are we? Obviously we've hit a positive on the the very fast oscillator. We don't trade that, but it's on our alarm bell. MACD is down below here, getting ready to change. It's still in negative territory. We've closed above our 14 EMA and definitely above our 10 EMA, and we've come up against the 200 EMA. Will this act as resistance? So now you want to see it close above there. And now we're going to start to close that gap. So another case in point, if you bought down here and the relative strength index was, 32, definitely oversold, you would have had a nice ride up to here. I'm not into reflective trading. I don't suggest it. What is the short term? But you can certainly take a small position of risk. 60-minute, way back here on the 13th, so that was Friday. Nice ride up. It's bumping up into the 200 EMA, and it's the overbought situation at 66 RSI. The 120, same deal, positive, and all our indicators. And if you had traded here, I can't argue with you. Just be prepared to get a lot of it stopped in and out. But as you can see, that it's tempted to trade the 120. It's a great indicator. So am I in this yet? No, but I do have a buy. My buy is going to be raised up to the 9 EMA, which is 129.52. Or you could go with the 14, which is 130. Excuse me, 129 to 130. And then just put your stop down here. 127, 2 points risk. It's an ETF. It's not a huge mover, but it is a little pricey. Let's look at UNH. And you could you could look on Yahoo or Google, pull up the XLV, and then you look at the top, and there's usually on Yahoo stock, it has, we'll do it right now. Yahoo. Stocks, finance. UNH. I use CNBC as well. Statistics, profile, financials, holders. Let's see. Profile. It doesn't tell us markets. Excuse me. That's just the institutional holders, top mutual funds. Let's see. Interesting. I take that back. I guess it doesn't have. Oh, that's because I'm looking at UNH. All right. Let's see. Quote lookup. XLV. XLV. There we go. Healthcare sector. Chart. Historical data profile. Top 10 holdings. There we go. La-da! Johnson & Johnson, UNH, Pfizer, Abbott. So if you want to say, you can either trade XLV. The way I do it, because what if Johnson & Johnson comes out and somebody finds out, or Abbott, I guess Abbott's in there, and oh, the baby formula, blah, 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 scare. That if you're just trading Abbott, you're excited about it, but then that gets hit overnight and it goes down 20%. The XLV it's only a weighting of 4.3, it's going to keep the XLV down a little bit, but not that. Only 4.3% is. But anyways, this gives you an idea. These are the top 10 holdings. If you want to pull those out and play them individually, it's up to you. But I stick with the ETF. And if you're new to trading, definitely stick with the ETF. All right, so that is getting ready. I don't know if it's going to make the positive change. My sector table's telling me to keep an eye on it. This is keep an eye on it. I have a buy-in around the 129 at the 10 EMA, and you can certainly be aggressive at the 14 and just put a stop, knowing that we haven't got the all-in buy signal. But if you want to take a small position to test it out, that's fine. I don't know where the market's going. I mean, we talked about this before. I'm not the best with Fibonacci, but if you look at a Fibonacci retrace, do you take it from the height up here or from here, the last high? Let's take it from up here. If you come down here, 0.382 is way up here, and we're almost at that point. A dead bounce is, 0.382. Potentially 0.5. We'll see. We'll see how aggressive it comes through there. But the volume is waning down here. It was high volume, low. Every day is a little bit lower. All right, so let's look at UNH. UNH was our 200 EMA kind of one. I had it originally. I was telling you I had a buy around here. I moved it down after this market was just tanking. Everything was being sold. I said, you know what? I'm coming down here. And I never did get into it. I haven't looked at my stocks today. I was on the golf course all day, guilty. Windy day out there, which is, I can't wait for this windy days to kind of subside. But with that said, it was a good day. I haven't looked at if I made a position. I don't remember seeing it tick off of my alerts on my phone. But with that said, it's at the 10 EMA. It's closed at or above that 492. It closed at 492. The 10 EMA is 492. So it's right there. The overbought was screaming. Oversold was screaming. It was down in the 30s. Will it go? I mean, I don't know. We've kind of had a dead cat, a dead bounce from up here. We haven't even made 0.38. It should get up there because it's surpassed the 0.23. We'll see. This tends to be a good stock. It never made it to the 200 EMA, which I said it often doesn't. But like down here, when it did, and if you got in, especially at the all-in, you had a nice ride, a little bit of chop here. Probably would have been in and out, but back in. So with that said, I'm keeping an eye on it. And if you do want to take a risk, you want to be down. I think you want to be down at 484. The 120, just curiosity. It's all the positive indicators, but we'll see. It's also starting to say it's oversold. I think that's what, 54. Okay, let's go back to our chart. So those are the things for the healthcare. Energy, We already talked about consumer staples. Let's look at that. That's kind of new on the horizon. Actually, I believe I have a position on that. XLP. I believe that did kick off on me. All right, so this is the 120 the daily. We have still not had confirmation on our 9 and 10. So if I did buy it, it's a risky position. It's above the 200 EMA. It bounced off it down here. We had an inflection positive here, but then a negative change here. And last week everybody got sold. We have my ACD has not given it, so we've got one morning bell that says yes, keep your eyes open for a buy. We haven't. The MACD is not confirmed, and this thing could go sideways or come back down. If you want to take the risk, since it is in our table. It's really a consumer staple, which has been 1.1. It's only been hammered -4. Consumer discretionary, it's not quite that. That's up 3.8, but it's one of those ones you want to take a look at. Okay. Anyways, we haven't gotten the all-in signal yet. Maybe tomorrow. It's getting close, right? The 120 certainly did, but we'll see. What else do we have? So that covers our chart there. Healthcare we talked about. We have a couple there. Utilities. Okay, utilities, as you know, it's been 2.75 and down for the year only -1.45. I like it. I do like the utilities. I usually use XLU. There's many out there. Duke Energy, all these things. I don't like to play one. I like to play the basket. Okay, and let's see if we can use our Yahoo. XLU inside that sector profile. What holdings? Oh boy, I'm getting Duke Energy. There you go, 8%. Next Era Energy. Next Era. I haven't even heard of that. 17%. Southern Company, I've heard of that. Dominion, I've heard of that. American Electric Power, I've heard of that. That's a Kramer fave. XL Energy, I've heard of that. American Waterworks, of course, I think everybody's familiar with that, with what's going on out there. Public Service, not familiar with that. Exelon. So you might as well, why play one of these? You might as well play XLU. Let the manager of that fund monkey around with those, and you just take this position. I'm in this. I told you that. I've been in and out. I'm willing to go sideways on this for a while. Because of it's a stable and it doesn't usually move that much, but the XLU is when it does run, it's good. We're getting close to that. It's closed above the 9 and the 10 and the 14 EMA. If you put a buy in at the 10 EMA at 71.6, do it. Take it. Put your stop down below the last major low, which was 69.9, or you could even go to 69.6, but I would put it here. If it does get back, you'll be out, and then if it goes to the 200 EMA, we could take another shot at it there. But it's getting close to go. It's, if it goes sideways, it's not going to hurt you. The 120, certainly above the 200 EMA, all very positive. So you could certainly take a position there. And I think next segment, we might start going into like actual, here's our stocks. I like to wait to get that inflection point so we could say all in. I just feel much better. So we did utilities. Anything else? Backspace. Nope. Excuse me. Bonds. Yes, bonds. I'm back in the bonds. That was one that TBT, the 2X, got flushed out. I sold 85%. I kept a small portion because again, here's my bias taking over. I think interest rates are going to go up. As interest rates go up, yields have to go up. If the Fed starts selling their bonds in June, there'll be they're rolling off their balance sheet. I don't know if there's going to, I'm not smart enough to figure this out. Will there be an excess of bonds that are being sold? All I do know is bond yields need to go up if people are going to take the risk and buy those, especially if they think Everybody thinks the market is a short-term blip and it's going to return. I don't think it will. That's bias now. But with that said, as they raise yields, TBT, which is the inverse of that, is going to rise, right? As yields go up, the TBT goes up. Simple enough. So I got back in, and not, right after I got 85% of my position out, but I protect a lot of profits. I'm building a position. It's above the 10 EMA. It never inflected down. This is dropped down here. This is went positive. So it's it's a little bit of a risk, but I've got my stop down by this last low here, 24. So every day I wake up, if it's opening lower than where it closed, I'm buying. Let's see. Let's look at the 128. All positive inflection changes. So everything is confirming, but we never really got the all sell signal. Let's see. TBF is the 1-to-1 versus 2X. And that one I'm a little more tolerant. I sold 80 for 5% again because we had this big drop. I had a lot of profit built in from way down here. Not a problem. I sold a little bit once it closed below the 10, and then once it went down to 14, and I kept a little bit. And I the next days I bought back in at 190, 19.84, and I've been buying every day. Even today, I think I was able to. It was a little bit lower. But with that said, things are kind of, we're still negative here in the MACD, but we're still positive up here. What about our relative strength index is 65. Last high was 73, and then it started coming down, and way up here, same thing, it was 76, and then we had a downdraft after that. So I think we got a little bit of room for it to go up, and if you are going to buy, this one, you could go down at whatever the 10 EMA is, put your buy in there. If it's going to be hard to kick off, but if it does, you're in at 19.94, and raise it up every day until you do get a hit. But there you go. What else? So that's bonds. Oh, the inverse TLT, which is usually as yields come down, and when you look at the chart on CNBC and CNBC. Boy, I'm sorry, I'm moving this way too long. This is a long segment, and I apologize for that. Bonds, 10-year Treasury, and that's, it's really the 20, but when that's negative red, the TLT will be coming down. So TLT has been, going up, but it's not. Yields have been rising, so the opposite happens. The 9 is well below the 14, 15. The 10 is below the 15. Used to use the 9 and 14, but everybody uses the 10 and the 15, so I went to that for these presentations. So we don't want to be in there. I buy the inflation protected, Treasury inflation protected by Schwab. That's what I usually buy. It's got a decent dividend. That popped up a little bit, but again, it's all negative. What is the short-term inflection saying? Negative. The 120, downward trend. So everybody's down. What is the relative strength index? It was way down here, oversold 31. Now we're into it's starting to rise at 38. So it's not ready yet. Okay, don't buy that. We talked about Verizon was a dividend play and the 200 EMA, and that had a quick, One of the trends I look at is also, I didn't put it in here, and I probably should put it in our sector trend in that category, and it's part of the environmentals. The S&P during last recession was down around 9 times earning. We've been up in the 30s. I think it's now around 16 or 17. So we've got, if we do get into a recession and things get bad, 9 and 17 is a big difference. So the valuation has to come down of stock prices have to come down for the multiples times earnings that come down. We haven't got there yet. So that's one of the things I also look at. Again, my bias, that's bias. I got to make sure my technicals tell me that. Verizon was well below the 200, had a huge drop down. I was listening to CNBC. The guy said, buy it because it's got a juicy dividend. It's way down. If it, it hasn't been down here in a long time. If it pops, great. If it doesn't. Anyways, the horse was out of the barn, but I bought it down around here somewhere. I guess I'm in at 48 now as a dollar cost average because I bought a bunch. It's going sideways. That's okay with me. If it's starting to close above the 10 EMA and the 14 EMA, very positive sign. Oscillator up, MACD starting to turn. We haven't got the all-in we may not by the 9, the 10 and the 15 EMA, but I'm in it. And as a dividend, if it goes sideways, I'll take the 5.5% annual dividend. The 120 starting to show tiredness. The relative strength index on this one is 59, so it's saying it's a little bit overbought. What's the relative strength index was at 46, it's at 40 something, so it's relatively healthy. It's not oversold. When it was down in the 23. So if you start seeing things that you're looking at, your relative strength index is a 14 EMA type setting I use. It's down in the 30s. That means it's been oversold. It's a good time to buy, but you got to look at the fundamentals of a good company. Obviously, Verizon is. So that's been, we have Tesla and U.S. Steel. U.S. Steel is another one of those. It's kind of a play on the infrastructure deal and should be using more steel as we build more bridges and blah, blah, blah. It was down around the 200. My position is down at 24.72. I bought it a couple of times. Again, no indicator to buy. The only thing is a relative strength index that was down that day was down at 21, pretty low. It's down in the 28s. I'm taking a chance. It's below the 200. It blew past the 200. I had watched it because I had buys in it at 200 EMA and I got stopped out. I ended up taking a position. I'm just holding it. Our short-term indicators are not positive. Nothing's positive that tell us to buy. It's a risk. It's a risk buy. It's a low cost. It's the infrastructure play. Short term, some upward mobility here. Relative strength index, 53 was as high as 56. Certainly near the overbought. Or certainly 46 was at 50, 47 on the 120. We're starting to get the inflection with the 10 crossing above the 14. It hasn't happened yet. The MACD is positive. So here's one. If it does cross over on the 120 and you're looking at the 120, you can take a position. So I'm in that. I'm going to watch it. My stop's down. I've given myself plenty of room, but it's below the last low. It's around 23 something. I'm watching it. I'm in it and I'm watching it. Tesla, that one bounces all over the place. I'm not yet convinced it's ready to take a ride, and it hasn't shown me anything yet, but it has moved up. It was oversold 29.98. Our oversold index is 38. It's still oversold 60. Some positivity, not perfect. 120. Some positivity, not perfect. I'm waiting on this. I don't know where my buy is. I think it's down around. Maybe I did buy. This green is that? No, that's a buy. It's a buy. My buy is at 696. Okay. I'm not convinced we're out of the doldrums of the market. Anything, these high flyer multiples, especially NASDAQ stocks, where there's a lot of them are not profitable, they're going to drop 50% in some cases, so be careful. So we've kind of beaten down our segment here. We talked about, just in our quick recap, Twomey investment process. We revisited that. We looked at a lot of our technical indicators on some of our stocks we were tracking. I am still short. I think my short position may get wiped out tomorrow. So be it. And it is what it is. That's why I have stops. And then it's a golf day, so I don't want to be sitting by the computer all day. And then in addition to that, if it goes sideways, so be it. We'll be in the market for a little bit longer on the short side. Tomorrow at some point, I'm going to take a look at this in the morning, and then at night, I don't know what it's going to be in the morning. I don't know what the futures are right now. Futures are pre-market. What are they? 18. Yeah, they're flat. So anyways, with that said, my bias, my trend is negative. My trend is down. I think the bias is starting to, take root now and say we're either in a short-term bounce. Bear market rallies can be really fun. You can make some money on that. You can even hold some of your short positions. But usually the trend continues. But let the technicals tell us. Are we going to get at the bottom? Not all the time. Are we going to sell at the top? Not all the time. But if we can ride the trend as long as possible, minimize the in and out situation that drives everybody crazy. I don't want to be a reactive trader. And the last couple of days, I really sensed this reactive trading, and I don't like that feeling. And that tells me, hey, I'm in the stock market to make money. That's as hard as it gets. I use these principles so I can ride the trends. I look at the sector. I understand where the trend's going. I get in the ETF in that sector. And then I also play the indices. I play the NASDAQ, the Russell, the Diamonds, the Dow, and the S&P. I typically use either Schwab or something else that has a ETF that's not at 300, but it's at, what is the broad market, which is like the S&P. I think it's SCHB, U.S. broad market. That's at 47. A lot easier to buy that, right? It sure is. What's inside this? Plane crash that killed all aboard. Intentional. Oh, that's the Eastern Air. That's the China one I told you when I bought Delta. All right. Finance. Okay. Not that it was a Delta. It was an actual Boeing made the plane, but, it looked like it was intentional. All right. We took SCHB. Let's see if we can get inside that. Let's try. I think it's holdings, right? Oh, interesting. Apple, Microsoft, Amazon, Facebook, Alphabet, Tesla, NVIDIA. Broad market. It's a big basket of really good stocks. Amazon's really hard to trade at inflections. All these are pretty high price. NVIDIA is up and down. Obviously, Tesla we've looked at. So, it's a lot easier to take Schwab, in a broad market. Let's say that kind of use it as my SPY proxy. I'm going to start following this because look at where we are, trend. If the market starts to hit on my SPY, this is where I'll come. So I'm going to start compiling that list. If the market turns up, great. If it doesn't and we get an inflection point, we got to be ready to, if you're not in, you got to get into the shorts. SH, PSQ for the NASDAQ, RWM for the small caps, and dog for the Dow. So, we're going to have, right now, those positions, are we're holding and maintaining a third of our positions. So the next couple of days are going to tell us. Let's see where it goes. And we may get in and find out that the market, reverses back down on us. So be it. But we'll have to be prepared. So that's it for today's stock market report. Today's the 17th. I'm James Twomey. And again, this is the basement tapes. We're talking around the kitchen table, going over processes. There's not a lot of whiz-bang video. There's not a lot of, high-flying, highfalutin, mathematical formulas coming at you. It is the real deal. It costs nothing. I'm going to streamline these going forward, And then we're going to probably get a newsletter started for you folks that can, because you just can't sit at the kitchen table and listen to an hour on these reports all the time. I'm James Twomey. Have a great day. Thank you for listening, and we'll talk to you soon.